Good afternoon, everybody. Today's date is 3/28/2016, 2:04 p.m. Pacific Standard Time. We have a Google daily chart with us right now, and I'm also going to put the GOOGL in here, and we can see that Google has a small range. 6.26 is it on a million shares. So the actual movement in today's range, we would like to see this up around $18 or so. But on this daily chart right here, we're at a major top. We're at a half bar. This trend line comes right over here where Google went down in January with the rest of the market. Now, having said that, I'm going to go over here and we're going to do this. We are going to take a look at this little gap down. The blue line on Google is exactly the 10-day at 755.99. And today, when we closed out of it, we closed out on the last print there at 753.28. Now, having said that, I'm going to buy some weekly put options on Google. And here is the options on Google today. It's a 745 put option. It had a dollar range, 81 contracts traded. So, as I said, where the resistances level, if we can get our entry at $1.20. That would mean that Google would have to have a nice move to this resistance level, which I'm going to show some of my traders, is here is what it does. So basically, we were at 758, and in order to get that put contract, we would have to see the wick come right up in here, and then it would drop immediately. And that the bearish part is we're not closing above this blue line is a 10-day simple moving average. Now, this one here on Google is a 745, and we go down here as a reversal. The 745 could get in the money for a short-term trade, and there it is. And I'm going to show people what that would look like. And, you know, 99% of the world has never ever seen a put chart, a 745 put chart. And I'm going to show it to you guys. Um, this is where it was. It was at its lows today. And this is a put chart and the value of it. A few days back, these were worth, $12.80. So based on the actual price movement in GOOGL, we're going to go back to here, click on that, and we are going to get an entry tomorrow based on the gap open up or the gap open down. If it's the gap open down, then that put option would go up in price, not down. It would go up if that would be the case. And this is it right here, 81 contracts. There's the ranges. 341 on the high, 350 on the previous close, 240 Gordy, which is 280 ladies on the low, and the 10-day moving average right now is not closing above it. If we start to go that way, then what we'll end up doing is we'll end up doing this. And I'll just let you know right now, we would be happy to buy the $755 call on Google. They closed at 685 on last Friday. Today's range, though, was 810 and the low was 493. Now, having said that, that's going long and trading it long. I just want everyone to know that this is a call chart a 755 call chart. And you people know darn well you've never seen nothing like it. And you know what else? You trade options. You don't even never seen an option chart. Ever. Why? Well, get involved here. So, for some of our traders, what we're going to do is if we gap down in the morning, I would love to be getting an entry at $2.80 on the opening bell, which is a $755 call that is totally deflated in value. You got to realize that 3 days ago, these call contracts were up here and they were worth a lot of money. And since then, Google has not performed. And here's the deal. I'm going to show you the deal. The low was 493. The high was 810. That means that this lower market for that 755 call and Google closed down only here. Google closed down only $1.56. 758 was the high. Now, this call option has a lot of room to go higher. And here's the deal. We have a 755 call and we showed the 745 put and we're going to get our guys in this trade. They expire Friday, but that's okay. You know why? We're market makers. We make the market around what you public people do. And if I were you, I would get over here with us. Everything that we do has a foundation. It has a put chart. We have call charts. When we're looking at trading something, we're not throwing an order out there like the retail public does. They don't have any data to see. All they have is gambling in their mind. That's all they have. They only have a wish or hope. No, we have the parameter. We will trade it. The 755 call is deflated in price, and the deflation in price is down here. 3 days. Am I wholesale? Yeah, I would say, because here's what you got to realize. This is where we are now on the 755 call for you new people. Get in the free 5-day trial. Do yourself justice. Look at that price up here, just so everybody knows. Look, that price was $14. And from $14, we've gone down to the low of $4.93. So we're buying $10 below the retail market. Our orders are down here, and all the other people, all their orders are up here. Look, they traded 539 calls today. And Friday was 685 close. Bam, there it was, and there was a high, 810. The premium, $3.17 on how to do that 755 call. And that's exactly what we're going to do. Now, if we get lucky enough for the gap, we would say the following. Let's take a look at the put option now, at the 750 put. These were 540. They only moved a little bit. 483 contracts were traded, and that's a 750 put. All right. How do you like me now? Now, here's what we're going to do. Bingo. Guess what? On this side of the market, on the put side of the market, this put side is cheap. They're both cheap. And what do I mean by that statement? I mean this. Here's exactly what I mean. I'm going to go down here. I'm going to go to today. And today is this. We opened at 390. We went up to 540. And guess what the low was? 380. And the closing price was 440. $4.40. Total volume traded today was 483 contracts today. Open interest prior to today is 325 contracts. Now, listen, we got both setups for Google. We've got the put side that is deflated, and here is the 750 put, the close on Google was 753. We have the 755 call, and we're going to make money. And you know what? If we gap down tomorrow, the put's going to go up, and our first transaction, they drop this down. I'd love to get this around, let's say, $2.40. But in order for that to happen, Google has to gap up in pre-market, and we will throw these limit orders. I'm going to conclude the 750 put, which we covered. I'm also going to include, once again, the 755 call. And once again, I'm going to tell everybody that the 745 put at $1.20 would be great. And the 760, this is a call chart. Now, let me throw that in there, MMT. And here's the land of what? Opportunity. I love myself for that. Check it out. The 760 call was up here at 560. And look at the call. That's up and out of the money. Now, you guys have never seen a call chart, and I've been doing this my whole life. And I'm telling you that I have a great opportunity to buy a deflated call. What does it mean, everybody? It means that we are taking out 90% of the risk in these trades that I'm going through here with my other MNTs. They were $14 up here. Today's low was 2.75. And there's nothing more than I would love right now, depending on the way the gap and the way that Google is going to operate. I'd love to get this at $1.10. So I'm going to conclude the fact that I've covered call charts, put charts. The public has never seen it. And you know you haven't seen it. So why are you even thinking that you can trade an option? You don't have a reason why. You're going to lose money. I'm buying wholesale based on the opening bell of the gap. If I gap up, well, of course these are going to go up. But if I gap down, I already told you. They hit 275. I'm a buyer at $1.10. Thank you very much. Welcome to the Google strategy.